What's going on, people? Future real estate agents and people who just want to learn about real estate. We're in New Jersey. Um, Real estate exam review study guide with me, Luis Valencia, and this is part 15 of our real estate series, vocabulary. We're up to vocabulary right now. Last time we left off on the S's. But I found some more words that I think we didn't go over. So I'll keep going with the S's until we finish the S's. And we'll see how far we get along today. If you guys like this video, you could like the video so the algorithm helps it rotate more in the YouTube channel, YouTube space. And if you subscribe to it, then you can get a notification. So next time I have a video, you guys can look at it. It pops up on your notification, right? Okay, buddy. All right, so let's do some of the S's that I think were left off that we didn't do. Okay. All right. Okay. Let's start with subsurface rights. Subsurface rights. Okay. Subsurface rights is ownership rights in a parcel of real estate of any water, mineral, gas, oil, or so forth that lie beneath the surface of the property. Subsurface rights. Ownership rights in a parcel of real estate of any water, minerals, gas, oil, and so forth that lie beneath the surface of the property. So you have subsurface rights as an owner of a parcel of land. Okay. The next word is suit for possession. Suit for possession. This is a landlord's court action to evict the tenant. Suit for possession. Landlord's court action to evict the tenant. Okay, the next word is a suit for title. Suit to quiet title. This is a court suit to quiet title. This is a court action intended to establish or to settle the title to a particular property, especially when there is a cloud on the title. Suit to quiet title. Suit to quiet title. A court action intended to establish or to settle the title to a particular property, especially when there is a cloud on the title. A cloud is like something negative that probably won't let you close on the house. Okay, the next word is supervising broker. Supervising broker. This is the one broker registered with the Department of State and is in charge of a real estate office responsible for the actions of the salespersons and associate brokers. Supervising broker. The one broker registered with the Department of the State and is in charge of a real estate office responsible for the actions of the salespersons, people, and associate brokers. Okay, the next word is surface rights. The other one was subsurface rights. This one is surface rights. This is the ownership rights in a parcel of real estate that are limited to the surface of the property and do not include the air above it, air rights, or minerals below the surface, subsurface rights. So surface rights is the ownership rights in a parcel of real estate that are limited to the surface of the property and do not include the air above it, air rights, or the mineral below the surface rights. Okay, the next word is surrender. Surrender. This is the cancellation of a lease by a mutual consent of the lessor and the lessee. So when you surrender the lease, it's a mutual consent of the lessor and the lessee. The cancellation of a lease. A surrender, a cancellation of a lease. Okay, so when two people agree on a contract that they don't want to go through with it anymore, they surrender it. They surrender the lease. Okay, the next word is we did that one. Syndicate. Syndicate is a combination of people or firms formed to accomplish a joint venture of mutual interest. A syndicate a combination of people or firms formed to accomplish a joint venture of mutual interest, a syndicate. A combination of people or firms formed to accomplish a joint venture of mutual interest. So it's like a group, or a group of people, or a group of firms formed to accomplish a joint venture of mutual interest. Right? That's a good word, syndicate. Okay, the next word is the T's. We're going to the T's now. The next word is tacking. Tacking, adding or combining successive periods of continuous occupation of real property by several different adverse possessors. Tacking, adding or combining successive periods of continuous occupation of real property by several different adverse possessors. Tacking. The next word is target areas. Target areas. These are neighborhoods in which the state wishes to strengthen housing stock. Target areas. Neighborhoods in which the state wishes to strengthen housing stock. Okay, so this is where the state wants to build houses. Okay, the next word is tax credit. Tax credit. This is a direct deduction from tax due. Tax credit, direct deduction from tax due. So you try to get as much tax credit as you can and try to report as much as you can, hopefully with your business, so you could get it taken out on your taxes. Tax credit. Okay, the next word is tax deed. Tax deed. This is an instrument similar to a certificate of sale given to a purchaser at a tax sale. A tax deed is an instrument similar to a certificate of sale given to a purchaser at a tax sale. So if you want to buy a tax deed, it looks like it's an instrument. So an instrument is like a paper, like something written on paper, similar to a certificate of sale given to a purchaser at a tax sale. Okay, so at a tax sale. So let's say there's a foreclosure and you want to buy a house. This house goes for 500. Who says 500? No one says. Anybody? 510, 520. And then you get it at whatever price and then sold. So then you buy it at a foreclosure. Not a foreclosure, at a tax sale. Okay? The next word is tax foreclosure. Tax foreclosure is seizing of a property for unpaid taxes. Seizing of a property for unpaid taxes. This is tax foreclosure. Okay, the next word is tax lien. Tax lien. This is a charge against the property created by operation of law. Tax liens and assessments take priority over all other liens. A charge against property. A tax lien created by operation of law. Tax liens and assessments take priority over other liens. Okay. The next word is tax rate. Tax rate. The rate at which real property is taxed in a tax district or county. For example, real property may be taxed at a rate of 0.056 cents per dollar or assessed valuation. 56 mils is the same as 0.056 cents per dollar. Okay, the rate at which real property is taxed in a tax district or county. Okay, the next word is tax sale. Tax sale. This is a court-ordered sale of a real property to raise money to cover the delinquent taxes. So let's say a house that's worth $3 million, and they owe, I don't know, let's say $1 million, right? And they pay taxes, and they missed a couple of years of not paying taxes. Even though the house is worth $1 million, the government could take over the whole house and then basically sell the house just so they could get the tax money. Basically the amount that they would owe. So if they owe, I don't know, $10,000 a year, or maybe $13,000 a year for a house that's a million, then let's say 3 years would be 39,000. So 39,000 they would sell the whole house, even though it's $1 million, at whatever price, just so they could pay the 39,000. So that's a tax sale. All right, the next word is tax tax shelter. Tax shelter. Okay, this is an investment yielding paper losses that may be used to shield other income from taxation. In real estate, often the result of depreciation. An investment yielding paper losses that may be used to shield other income from taxation. In real estate, often the result of a depreciation. Tax shelter. An investment yielding paper losses that may be used to shield other income from taxation. In real estate, often the result of depreciation. Tax shelter. So if a house is worth 500,000, then you could show how much it would depreciate over the year. And I think you have like 27 years and a half to depreciate or something. I'm not sure. Something like that. Okay, the next word is tenancy at sufferance. Tenancy at sufferance. This is a situation in which a tenant comes into possession of a land by lawful title and keeps it afterward without any right at all. A situation in which a tenant comes into possession of a land by lawful title and keeps it afterward without any right at all. This is basically a tenant that doesn't want to pay the rent and wants to stay in the house, and not pay the rent. See, tenancy at sufferance. So the landlord suffers, and the tenant probably suffers too. So that's why he's staying for free. That's why he decided to not pay. Okay, the next word is tenancy at will. Tenancy at will. This is an estate that gives the lessee the right to possession until the estate is terminated by either party. The term of this estate is indefinite. Tenancy at will, a estate that gives the lessee the right to possession until the estate is terminated by either party. The term of this estate is indefinite. Okay, the next word is tenancy by entirety. Tenancy by the entirety. This is the joint ownership of a property acquired by a husband and wife during marriage. Upon the death of one spouse, the survivor becomes the owner of the property. The survivor becomes the owner of the property. The joint ownership of a property acquired by husband and wife during marriage. Upon the death of one spouse, the survivor becomes the owner of the property. Tenancy by the entirety. So when people get married, and then they buy a house, and then one dies, and the other person has it, keeps the house. That's tenancy by entirety. I believe tenancy in common as well. Well, the next word is tenancy in common, a form of co-ownership by which each owner holds an individual interest in the property, and if he or she were a solo owner, as if he or she were a solo owner. Each individual owner has the right to partition. Tenants in common have no right of survivorship. Oh, that's the difference. Yeah, tenancy in common. I think it will be more like joint common. That would be tenancy by entirety. Something like joint tenancy. Okay. So tenancy in common is a form of co-ownership by which each owner holds an undivided interest in the real property of he or she were a sole owner. As if he or she was a sole owner. Each individual owner has the right to partition. The tenant in common have no right or of survivorship. So if somebody dies, they don't receive their part of the home or of their ownership. It will go to their heirs or to whoever they decide they want to give theirs to, but it doesn't go to the person that they were co-owners with. Okay, that was tenancy in common. Okay, the next word is tenancy in severalty. Tenancy in severalty. This is the ownership of a property by one person only. The ownership of a property by one person only. Tenancy in severalty. Okay. All right, the next word is tenant. Tenant. This is one who holds or possesses lands or tenements by any kind of right or title. One who holds or possesses lands or tenements by any kind of right or title. Tenant. Next word is testator. Testator. One who makes a one who makes and signs a will. A testator. One who makes and signs a will. Testator. Testers. These are members of a civil rights and neighborhood organization, often volunteers, who observe real estate offices to assist compliance with fair housing laws. Testers, members of a civil rights and neighborhood organization, often volunteers, who observe real estate offices to assist compliance with the fair housing law. So they make sure that the real estate offices are doing what they're supposed to do according to fair housing laws. All right. The next word is time of the essence. This is a time of the essence. Okay, this is a phrase in contract that requires the performance of certain act within a stated period of time. A phrase in contract that requires the performance of a certain act within a stated period of time. So time of the essence will be like, let's say you are about to close on a contract, right? Time of the essence will be like, okay, let's say you have to have an appraisal by this date, and you would have to have the accounting of everything that's accounted by this date, and you would have to have all this stuff ready before this date so we could close on time. So that would be considered times of the essence. Okay, the next word is time sharing. Time sharing. This is ownership of real estate for only a portion of the year. Time sharing. This is a phrase in contract. In ownership of real estate for only a portion of the year. So let's say you own a house, right? And then, I don't know, you want to rent it for like June, July, and August. You can rent it as a timeshare. Time sharing. So you could give it, but it's ownership. So you could own the house at those specific times if you want to sell them. That you could sell the ownership of those specific times. That's what timeshares do. Like when you go on vacation and they're like, oh, you want to have a free dinner, and then you could talk to it. You could purchase this property for every 8th to the 10th of June of every year, and then you could come here every 8th to the 10th of June, and you could enjoy this paradise. That's what a timeshare is. Okay, the next word is title. Title is evidence that the owner of land is in lawful possession thereof. This is the evidence of ownership. Title. Evidence that the owner of land is in lawful possession thereof, and is the evidence of ownership. Okay. All right, the next word is title insurance policy. Title insurance policy. This is a policy ensuring the owner or mortgage against loss by reason or defects in the title to a parcel of real estate other than the encumbrances, defects, and matters specifically excluded by the policy. A title insurance policy, a policy ensuring the owner or mortgage against loss by reason of defects in the title to a parcel of real estate other than the encumbrances, defects, and matters specifically excluded by the policy. So title insurance is basically to confirm that the title is good. Like there's no problems in the title before it gets transferred to the new owner. So this is like an insurance you pay to say, yeah, this title is good, and I have this insurance to say yeah, this title is good, everything is good on it. All right. Okay, the next word is title search. Title search. This is an examination of the public records to determine the ownership and encumbrances affecting real property. Encumbrances is like the negative things that you might see on the property. that might prevent it from selling it. That might prevent it from selling it. So you do that through. You do that with the title search. So you do that. You could do that through title search, which is an examination of the public records to determine the ownership and encumbrances affecting real property. The next word is Title 8. Title 8. This is section of Federal Civil Rights Act covering housing. So Title 8 is the part in the Civil Rights Act that's covering housing. Okay, Title 8. Okay, the next word is Torrent system. Torrent system. This is a method of evidencing title by registration with the proper public authority, generally called the register. Torrent system. This is a method of evidencing title by registering it with the proper public authority, generally called the register. Torrent system. Okay, the next word is township. This is a principal unit of the rectangular survey government survey system, which is a square with a 6-mile sides and an area of 36 square miles. So a township is 36 square miles. Alright? The principle of a unit of the rectangular survey, government survey. A square would be a 6-mile each side and an area of 36 miles. A township. 36 square miles. Alright, so it's basically like 6 miles by 6 miles. That would be a township. Okay. So the next word is trade fixtures. Trade fixtures. Trade fixtures. These are articles installed by a tenant under the terms of a lease and removable by the tenant before the lease expires. Trade fixtures. An article installed by a tenant under the terms of a lease and removable by the tenant before the lease expires. Trade fixtures, that's like when you have a business and then you rent like a commercial space. And then the stuff that you would use in the business, let's say you built a factory, then you can take all the factory equipment with you. Those are considered trade fixtures. Like you could take them, let's say you built another factory, so then you could take the machines and bring them to the other factory. Even if they're drilled down and everything, you have to undrill them. Alright, so that's trade fixtures. Okay, the next word is transaction. Unless you want to sell it as a package loan, or not package loan, a package sale, I guess. I forgot the exact word, but it's something package where you could sell the space with all the equipment in it or not. You know what I'm saying? Or just the space alone. Alright, so yeah. Okay, the next word is transaction broker. Transaction broker. This is a licensee who works with a buyer, seller, or both without representing either one in an agency relationship. Transaction broker, a licensee who works with a buyer, seller, or both without representing either one in an agency relationship. So basically somebody who could assist in buying, selling the property, or in both sides, but is not hired as exclusive agent. It's not hired by the agency, so it's not considered an agency relationship. So it's like not a referee, but like a middle person between the buyer and the seller. And in between, everything in between. Okay, the next word is transfer tax. Transfer tax. This is tax required to be paid on a deed by state and or local law. Transfer tax is the tax required to be paid on a deed by state or local law. Okay, the next word is trespass. Trespass. This is unlawful intrusion upon another's property. Oh, trespassing. It says no trespassing signs. When there's some signs, sometimes they put no trespassing. So trespass is the unlawful intrusion upon another's property. Okay, the next word is TRID. 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 This is an acronym for the rule that combines the disclosures required by the Truth in Lending Act (TILDA) and the Real Estate Settlement Procedures Act (RESPA). Okay, an acronym for the rule that combines the disclosures required by the Truth in Lending Act, TILA, TILA, and the Real Estate Settlement Procedures Act, RESPA, an acronym for the rule that combines the two. So it combines TILA, the Truth in Lending Act, and RESPA, the Real Estate Settlement Act procedure. Okay, the next word is triggering terms. These are words in advertisement that require disclosure of all financing conditions. Triggering terms are words in an advertisement that require disclosure of all financial conditions. Okay, the next word is trust. A trust. You know, trust, like a trust fund, trust. Okay, this is a fiduciary arrangement whereby property is conveyed to a person or institution called a trustee to be held and administered on behalf of another person called a beneficiary. Trust. Okay, a fiduciary arrangement whereby property is conveyed to a person or institution called a trustee to be held and administered on behalf of another person called a beneficiary, a trust. Okay, so basically you own something and then you have like a manager of it, and then they have a responsibility of loyalty for you, and they basically manage your property, and it's basically to protect your identity more, you know what I mean? And you could use it also to protect you against like foreclosure or just to be able to pay the not to avoid paying taxes, but basically so basically it's like let's say you own a car, right? And then in the title it says your name, Luis Valencia, and then it's like, and then the title of the trust could be like, I don't know, cars, you know, a trust for it could be LV cars, something like that. That could be the name of the trust, and it has nothing to do with Luis Valencia, the like the name of where the title was. So it's basically, and then they would transfer that title to the trust, and then the owner of the trust could be still Luis Valencia, but it's not known to the public that that is owned by you. All they know is that the trust company LV Cars owns this car, but it doesn't. It's not specific about the owner of LV Cars. The reason being to protect the identity of the owner of the car. I think they possibly started this like super rich people. They were probably like, they were afraid of like getting robbed. Or not robbed, but like just like they didn't want everybody to know how much money they had, so they had to build trust. They had to build trusts, you know. So basically, they have the proof that they own the trust, but I guess they don't have to make it public that they own that trust unless they want to share that information. That's where I understand what a trust is. Okay, so I guess that's why it makes it easier to not pay as much taxes with that, but I don't have experience yet. Okay, the next word is trust account. Trust account. This is an escrow account for money belonging to another. A trust account is an escrow account for money belonging to another. Trust account, an escrow account for money belonging to another. So you have a trust, and then you have the trust account. Okay. All right. The next word is trust deed. Trust deed. This is an instrument used to create a mortgage lien by which the mortgager conveys his or her title to a trustee who holds it as a security for the benefit of a note holder, the lender, also called a deed of trust. An instrument used to create a mortgage lien by which the mortgager conveys his or her title to a trustee who holds it as a security for the benefit of the note holder, the lender, also called the deed of trust. So an instrument is a paper written that's created by which creates a mortgage lien by which the mortgager conveys his or her title to the trustee who holds it as a security for the benefit of the note holder. So the beneficiary is basically the same person that buys the trust, or it could be like a family member. Maybe you want to have a trust and you want to give it to a family member. They're the beneficiaries of that trust. But it's like creating not a company, but like an entity. I guess you could call it an entity, where like with paperwork, that the ownership of that entity is in this space, and then when the original owner of this dies or decides to give away the trust, the beneficiary could be who they will be considered the person will be considered when the trust is executed or whatever is given. But it's basically like a separate entity from the original one, the trust deed. But the deed is like the physical paper form. Okay? Alright. Hope it's not too confusing. I'm still confused about it. Okay. Obviously. The next word is Truth in Lending Act. Truth in Lending Act. This is a federal law that obligates a lender to fully disclose in writing all fees, terms, and conditions associated with obtaining credit. Truth in Lending Act is a federal law that obligates a lender to fully disclose in writing all fees, terms, and conditions associated with obtaining a credit. So basically, Truth in Lending Act is, let's say, I don't know, Chase Bank, they want to lend you money so you can buy a house. It's like, okay, how much are going to be the fees? How much is going to be the interest rate? How much is going to be the percentages? All that has to be stated, so there could be like legality to it, so like they don't start charging too much interest. You know what I mean? Yeah. So that's what the Truth Lending Act is, right? So it protects the customer, the borrower. It protects the person that's borrowing the money from the big banks. So this is put in like to protect the borrower from like the big banks. Okay, the next word is truth in renting. This is truth in renting. This is the New Jersey requirement that tenants be informed of their rights. The notice must be available in English and Spanish. The New Jersey requirement that tenants be informed of their rights, and this notice must be available in English and in Spanish. The truth in renting. Okay, the next word is UFI. UFI. UFFI. UFI. This is urea for formaldehyde foam, or urea for formaldehyde foam insulation that has been linked to cancer in animals, although its effect on humans is uncertain. UFI. It is an urea formaldehyde foam insulation that has been linked to cancer in animals, although its effect on human is uncertain. UFI. So it's like an insulation that's bad for animals, so animals shouldn't be around it. So if you have an animal, I would check for UFI. UFFI. Okay, the next word is underwriting. Underwriting is a process of deciding whether to make a specific loan. Underwriting is the process of deciding whether to make a specific loan. So the people that lend the money, the underwriting is like the research and figuring out if we should lend them or not. That's the underwriting. The time that it takes, the action of of getting that loan ready for the borrower. Okay, the next word is undivided interest. Oh wait, sorry, unenforceable contract. Unenforceable contract. This is a contract that seems on the surface to be valid, yet neither party can sue the other to force performance of it. A contract that seems on the surface to be valid, yet neither party can sue the other to force performance on it. So it's an enforceable contract. You can't take the people to court. You can you can you can you can use it as a proof that it should be administered correctly. You know, it's enforceable. It's an enforceable contract. Okay. The next word is Uniform Commercial Code, UCC. Uniform Commercial Code, UCC. This is a codification of commercial law, adopted in most states, that attempts to make uniform all laws relating to commercial transactions, including chattel mortgages and bulk transfers. Okay, a codification of commercial law adopted in most states that attempts to make uniform all laws relating to commercial transactions, including chattel mortgages and bulk transfers. All right, Uniform Commercial Code, which is used on all laws relating to commercial transactions, which include chattel mortgages and bulk transfers. Uniform Commercial Code. Okay. The next word is Uniform Construction Code. Okay, these are New Jersey standards for building. Uniform Construction Code. New Jersey standards for building. Okay, so they have builders, construction people, architects. They have to follow. You know, the code that they use is the Uniform Construction Code, the standards. Okay, the next word is Uniform Settlement Statement. This is a standard HUD one required to be furnished to buyer and seller. Uniform Settlement Statement, standard HUD one required to be furnished to buyer and seller. I'm not sure what this one is. I don't understand the Uniform Settlement Statement. I will look into them. A standard HUD one required to be furnished to a buyer and seller. It looks like a statement that must be put somewhere in the contract. Standard of HUD in a contract with HUD. Okay. The next word is unilateral contract. Unilateral contract. This is an agreement that is binding on only one of the parties. Unilateral contract. An agreement that is binding on only one of the parties. So this is like basically a contract only from one side. So it's like saying like I'll give everybody free ice cream if you buy this house. So it's like you're giving you're agreeing that you will do that, but you're the only one person is agreeing to it, the one that's given the contract. Okay, so that's a unilateral contract. Okay, not like a bilateral contract, which bilateral contract would be I'll sell you this house for 500,000. Will you sell this house? And then the buyer says, yes, I'll buy this house. Yes, I'll buy it. It's a bilateral. It takes two to make the contract work. One offers and the other one accepts. All right. So that's a bilateral contract. But okay, yeah. And the next word is unity of ownership. Unity of ownership. Unity of ownership is the four unities traditionally needed to create a joint tenancy: unity of time, title, interest, and possession. Unity of ownership. The four unities traditionally needed to create a joint tenancy: unity of time, title, interest, and possession. Unity of ownership. The four unities traditionally needed to create a joint tenancy: unity of time, title, interest, and possession. Okay. The next word is useful life. Useful life. In real estate investment, the number of years the property is useful to the investors. Useful life. In real estate investment, the number of years a property is useful to the investors. All right. So let's say they build a building, and then the investor is like, okay, but how long? And they're gonna build, like, I don't know. They're gonna build like a movie theater in that building, and then they're like, okay, but how long are we gonna have movies for? How long do you think we're gonna have movies for? The next 10 years or the next 20 years? If it's 10 years, then it'll be the useful life of it will be 10 years, and then the rest will not be the useful life, because there won't be a movie theater or the purpose that the investor needs it for. Yeah, useful life. The next word is usury. Usury. These are charging interests at a rate higher than the maximum established by law. Usury. Charging interest rates at a rate higher than the maximum established by law. Usury. I don't know if this goes with hard money lenders. I don't know how that works. But a usury is the charging interest at a rate higher than the maximum established by law. So it sounds like it will be illegal. Sounds like it would be illegal. Usury. Well, yeah, it would be illegal because it would be charging interests at a rate higher than the maximum established by law. So usury, USURY, occurs when an interest is charged higher than the maximum that is allowed by law, depending on what type of business or what kind of loan. I'm sure all of that depends. Okay. The next word is, and this will be to protect the borrower, because let's say you buy a house at $500,000 and you pay it in 3 years, 30 years, you're really paying it about 3 times. So let's say if you had a higher interest rate, maybe it would be like paying the house 5 times. So instead of paying $500,000, 3 times will be $1.5 million. 5 times will be $2.5 million for a house that's worth $500,000. So that's to consider what usury is used for, to protect the borrower. Maybe the borrower is not aware. Okay. The next word is valid contract. Valid contract. A valid contract is a contract that complies with all the essentials of a contract and is binding and enforceable on all parties to it. A valid contract is a contract that complies with all the essentials of a contract that is binding and enforceable on all parties. Okay? So that's a valid contract. Not like the unenforceable contract that we talked about earlier. That's not that seems like it's valid, but it's not really valid, because it can be, you can't force the other party to you can't enforce it. Okay, a valid contract, you could enforce it. Okay. The next word is valuation. Valuation. This is an estimated worth or price. This is the act of valuing by appraisal. Valuation, an estimated worth price, the act of valuing by appraisal. Okay, So to evaluate something, valuation, valuation, to find out the value of something. The act of valuing by appraisal. And appraisal is to to give it a value, to give it value. You hire an appraiser to give appraisals. Okay, these people, they follow certain, they follow like guidelines to see how much the price is of a house, of a building, whatever. Right? Okay, the next word is value. Value. Value is the power of a good, of a good or a service to command other goods in exchange for the present worth of future rights to its income or amenities. All right, the power of the value is the power of a good or a service to command other goods in exchange for the present worth of future rights to its income or amenities. So yeah, value is like what value is like, it's gonna be so important that it would like the value of this house would be this much, because now and in the future, because of its location, because of where it's, the way it's built, the the materials they use, the architect that made the project, all that stuff creates the value. Okay. The next word is VA mortgage. VA mortgage. This is a mortgage loan on an approved property made to qualified veterans by an authorized lender and guaranteed by the Department of Veterans Affairs. Veterans, like people that went to war, whatever, people that came back from war. It's a mortgage loan on approved property made to qualified veteran by authorization lender to guaranteed by the Department of Veteran Affairs. I believe they don't pay. I don't think they don't pay a down payment. I would check on that, but I believe like if like a veteran that's trying to buy a house, I believe they don't pay. I don't think they pay a down payment. Okay, the next word is variance. Variance. Variance is permission obtained from zoning authorities to build a structure or conduct a use that is expressly prohibited by the current zoning laws, an exception from the zoning ordinance. A permission obtained from zoning authorities to build a structure or conduct a use that is expressly prohibited by the current zoning laws, and an exception from the zoning ordinances. So a variance could be like, I don't know, they say there's a building and then you're in an apartment, and then a variance could be like, you can't build stairs in this side of the community, or you can't have, for whatever reason, you can't have a door in this part of the community. But let's say the person is a wheelchair person, or person that needs a wheelchair or that rides in a wheelchair, right? So like that person would need a door at a specific time to accommodate them. So they could apply for a variance so they could build that ramp, they could build that door, where usually they won't have that door or that ramp in that specific area for whatever reason, whatever the town likes the way it looks without a door, or something that's not as important. So a variance would be like an exception. All right, so they would have to apply with the zoning department in the county, and that's where they should get accepted. Okay, variance. Next word is vendee. Vendee is a buyer under a land contract or contract of sale. Vendee is a buyer under a land contract or contract of sale. Okay, the next word is vendor. Vendor is a seller under a land contract or contract of sale. Vendor is a seller under a land contract or contract of sale. Vendor. Okay. The next word is voidable contract. Voidable contract. Voidable contract is a contract that seems to be valid on the surface but may be rejected or disaffirmed by one of the parties. So this is a contract that might be, that could be, or that seems valid but may be rejected. It's not like enforceable contract. Enforceable contract is like definitely you can't go to court with it. You can't go to court saying, oh, this contract says that I could do this. No, it's like it's an enforceable contract. A voidable contract, it might be rejected or disaffirmed by one of the parties. All right? Voidable contract, it may be disaffirmed. Okay. All right? Okay, the next word is void contract. Not voidable contract, but void contract. This is a contract that has no legal force or effect because it does not meet the essential elements of a contract. So voidable is possibly, it might not be. Void is definitely is not. All right? So void contract, no legal force. All right? Because it does not meet the essential elements of a contract. Okay. Next word is voluntary lien. Voluntary lien. This is a financial claim placed against a property by the owner. So a voluntary lien, most of the times you think about involuntary lien. Like a lien that's involuntary is like a lien. Let's say you didn't pay your taxes. That's an involuntary lien because you didn't put that lien on the property. The government or the tax people, they're the ones that put the lien on it. You know what I mean? A voluntary lien is like a mortgage. Like basically like when I pay this, then it becomes mine. Like when like people say I own this house, like you don't really like you own it, but like you really own it once you have like everything, like the like you paid it and then you don't owe it no more. So then you really own it. And then again, you don't 100% own it because you still have to pay taxes. And if you don't pay your taxes, then they could take it away. You know what I'm saying? And then there's eminent domain, and eminent condemnation, I believe it's called, where the government could take your house if they wanted to build a park on it, or they wanted to build a museum in your house, or something like that. But it's rare. I believe that it should be rare for that to happen without a very justified reason. Okay. All right. So we were in voluntary lien. So a mortgage is a voluntary lien. Like when you sign that loan, you volunteer that you volunteer to that lien, and then you basically promise that you're gonna make payments. So you could be like really full owner of that house once you're done paying it. You're considered the owner of the house, of course, but it depends how you look at it, really. Depends how you look at it. All right. The next word is waiver. Waiver is the renunciation, abandonment, or surrender of some claim, right, or privilege. Waiver is the renunciation, abandonment, or surrender of some claim, right, or privilege. Like you waive to it, like a waiver, like you give up the option, you know, like they say, okay, this house we're gonna sell it to you, but it's not gonna have any toilets. Are you cool with it? Yeah, I waive to it. I don't know if you can use in that term, but basically like you're okay. You're renunci. It's okay with you that it just waives it. It waives it in the contract. Maybe like I'm not sure what else could be an example. I'll try to think of one. I'll try to talk about it in the future. I'll study it a little bit more and then talk about it in the future. All right. For you, audience. Okay. Okay, the next word is waiver of broker cooperation. Waiver of broker cooperation. This is a seller's statement that the only one office will be marketing the property. Waiver of broker cooperation. A seller's statement that only one office will be marketing the property. So this is basically when the seller signs a paper saying, you know what, I'm going to work with that broker and that broker only. And I waive, I give them exclusivity. And by doing that, I waive the opportunity to other brokers. So other brokers, you know, I'm not gonna work with other brokers. So the seller would have to sign that because it's like a contract, like you sign. So the person that's helping you, the agent or the broker that's helping you sell that house, has that as proof that the seller signed off on it. All right. Okay. The next word is warranty deed. Warranty deed. This is a full covenant. Covenant and warranty deed. A deed in which the grantor fully warrants good, clear title to the premises. Warranty deed is a deed in which the grantor fully warrants good, clear title to the premises. So the title is good, and the warranty is like an insurance. Like it's good. Everything's good about it. So it's a warranty. To assure the buyer that everything is good with the deed. Okay. Okay. The next word is waste. Waste. Waste is an improper use or an abuse of a property by a possessor who holds less than fee ownership, such as a tenant, life tenant, mortgager, or vendee. Waste, an improper use or abuse of a property by a possessor who holds less than fee ownership, such as a tenant, a life tenant, a mortgager, or a vendee. Waste, an improper use and abuse of a property. Okay. The next word is will. A will. A will is a written document properly witnessed, providing for the transfer of title to property owned by the deceased, called the testator. A written document, a will, is a written document properly witnessed, providing for the transfer of title to a property owned by the deceased, called the testator. A will. It's the paper. A written paper. That has to be witnessed by somebody else, providing for the transfer of title to property owned by the deceased, called the testator. Okay, the next word is wraparound mortgage. Wraparound mortgage. This is an additional mortgage in which another lender refinances a borrower by lending an amount including the existing first mortgage amount without disturbing the existence of the first mortgage. A wraparound mortgage is an additional mortgage in which another lender refinances a borrower by lending an amount including the existing first mortgage amount without disturbing the existence of the first mortgage. I would check that one out. Not 100% on that one. Wraparound mortgage, an additional mortgage in which another lender refinances a borrower by lending an amount including the existing first mortgage amount without disturbing the existence of the first mortgage. I think it was a typo. I think is the amount including the existing first mortgage without disturbing the existence of the second mortgage, I would think. But I think they put two first mortgage. I think this is a book typo. But I would study wraparound mortgage. What exactly? Yeah. Okay, the next word is your home loan toolkit step-by-step guide. This is a 28-page booklet used by the Consumer Financial Protection Bureau that discusses the process of obtaining the best mortgages, understanding closing costs, and ways to be a successful homeowner. Your home loan toolkit, a step-by-step guide. This is a 28-page booklet used by the Consumer Financial Protection Bureau that discusses the process of obtaining the best mortgage, understanding closing costs and ways to be a successful homeowner. But check that out. Your home loan toolkit, step by step, guys. Sounds like a commercial. The next word is zone. Zone. Zone is an area set off by the proper authorities for specific use, subject to certain restrictions or restraints. Zone, an area set off by the power authorities to a specific use, subject to certain restrictions or restraints. So zone, an area set off by proper authorities for specific use, subject to certain restrictions or restraints. Okay. The next word is zoning ordinance. Zoning ordinance. This is an exercise of police power by a municipality to regulate and control the character and use of property. Zoning ordinance, an exercise of police power by municipality to regulate and control the character and use of property. This is zoning ordinance. Okay, so that's it. That was it. We finished. That was the end of the vocabulary in English. So I think that's the end of part 15. So the next video it will be part 16. So yeah, so that was it. Pretty much finished. If there's any words that I missed, I'll include them in future discussions for the study guide. Okay, everybody. So thank you for listening. Hope you understood a little bit, and hope they helped you at least a little bit towards your, to get your license, to pass your test, and you can start buying, selling houses. You can start buying and selling houses. So you just want to learn about real estate. Okay. Thank you very much. Bye, everybody. Okay. Bye, everybody.